create something great. I really do appreciate y'all patience that we've been going through today. It's just been technical difficulties from left to right, but nonetheless, we're back and we are ready to get this thing on and popping. Today, what we're going to be doing is creating a strategy to trade QQQ during high volatility time. Holy cow. VIX has crossed 26. That is crazy, fam. Earlier today, VIX was at 24. VIX opened at 24.15. It's at 26. SPY is still a bit elevated. Okay, let's go ahead and connect. Make sure we're getting live prices everywhere. All right, perfect. So today, what we're going to be doing is creating a live, we're going to be creating a QQQ trading strategy for trading um, zero DT, excuse me. All right, just got my water. Zero DTE options. All right. So earlier we talked about QQQ, but I want to go over this again so we really understand what the underlying asset is, how we're going to be trading it, how it makes sense, right? And before we actually get into coding, So let me just. All right, perfect. So when you think of QQQ, think of a big basket of 100 of the biggest tech heavy companies in the US, like Apple, Microsoft, Amazon, and Tesla, right? QQQ's full name is Invesco QQQ Trust. It is an ETF. An ETF, another name of saying, is an exchange traded fund, right? It's just another fancy way of saying that you can buy many pieces of company at once instead of having to buy them individually, right? So whenever you see ETF, right, think of an ETF like a quilt, right? You have quilts and you have different patches within the quilt, right? So an ETF is a quilt, right? And you're able to have different companies. So instead of the patches, you have companies, right? And each one represents an individual company that you can invest in. So when you invest in that ETF, you're investing in multiple companies, not just one. So that's the great thing about being able to have an ETF, right? So imagine you have 100 different video games. Instead of playing each game separately, someone makes a game bundle that gives you all 100 games in one purchase. QQQ is like that bundle, but for stocks, right? Why people like QQQ? It's mostly because it's strong and well known. It follows the NASDAQ 100. It lists the 100 biggest non bank companies on the NASDAQ, right? And it usually moves up and down when the tech companies move, right? Investors buy QQQ if they want to bet on tech companies are going to do well over time. Traders use it for quick moves, either buying or selling options, right? And that's what we're going to be doing today, right? And another thing I want us to be able to really hone in on is understanding the difference between the New York Stock Exchange, NYSE, and NASDAQ, right? We normally hear them. Sometimes they're interchangeably used in the same sentence, but they're completely different entities. All right. So let's talk about the New York Stock Exchange. The New York Stock Exchange is a fancy old building where people meet, shout on the trading floor. Right. This is the oldest and biggest stock exchange in the U.S. Kind of like the OG of the stock market. Right. It's located in New York. More traditional, older companies like Coca-Cola, Nike, and McDonald's. A real trading floor with people and computers. Companies must meet very strict rules to get listed on the New York Stock Exchange, right? So if you think of SPY, right? SPY lists the 500 top companies that are on the New York Stock Exchange. We have a strategy that trades SPY. Now we want to be able to create a strategy that trades NASDAQ, right? NASDAQ is the National Association of Securities Dealers Automated Quotations. That's why I just call it NASDAQ. NASDAQ is like a techie modern cousin of the NYSE or New York Stock Exchange. It started out completely electronic, no shouting on the floor, just computers and networks. No special trading floor. It's all online. Lots of technology. Can I say that word? Lots of technology companies like Apple, Microsoft, Amazon, Google, Tesla, right? More focused on speed and innovation, easier listing rules compared to the NYSE or New York Stock Exchange. So, a quick comparison: New York Stock Exchange started in 1792. So that's going to be on the quiz. I'm just playing. So New York Stock Exchange 1792, Nasdaq 1971, right? Traditional trading floor 100% electronic, right? Typical companies are Coca-Cola, Nike, and JP Morgan or John Pierpont Morgan, right? Just okay. I just want to make sure my levels are good because sometimes I can be talking for like 10 minutes, nothing happens. But nonetheless, let's keep going. All right, Vibe, classic Wall Street, and tech and innovation, right? So what we now want to be able to understand is that there is a correlation. Why do you keep doing that, homie? All right, so we noticed earlier that there's, oh, you're saying that I can't have more than one open. Don't be a little greedy, Debbie, bro. We noticed earlier this week that there is a inverse relationship between VIX and SPY, right? What we mean by that is when VIX is down, normally sometimes VIX helps SPY, but normally, right, when VIX is down, you're going to see SPY up. But when SPY is down, you're going to see VIX up, right? And I wanted to be able to pose the question, all right, is there that same relationship between VIX and QQQ? Now remember, QQQ is not on the New York Stock Exchange, NYSE, right? Whereas VIX is, right? Where QQQ is on the NASDAQ, right? QQQ, NASDAQ, right? The National Association of Security Dealers and Automated Quotations, aka NASDAQ, the big homie, right? So I wanted to figure out, is there an inverse relationship between VIX and QQQ, right? So pose that question. All right, this is talking about the strategy. We're going to get back to that, but I wanted us to be able to understand, all right, what is VIX and why is it inverse to stocks? So VIX is a large fear gauge, right? It measures the implied volatility of the S&P 500, right? Over the next 30 days. Typically, when the market S&P 500 drop quickly, fear rises, option prices go up, and VIX spikes, right? So one drops, one spikes, right? Conversely, we see when stocks rally or a calm returns, VIX tends to fall. This gives us a usual negative correlation. Stocks down, VIX up. Stocks up, VIX down, right? In historical data, the daily change of the SPX and VIX tend to show a correlation around negative 0.70, moderately negative correlation over a long period of time. And what is a long period of time, right? That's relative. Long period of time could be a year, could be 5 years, could be 10 years. But normally, right, it's 10 plus years, right? Long period of time, right? But VIX is tied to S&P 500 options, not directly tied to NASDAQ or QQQ. So the relationship with QQQ is similar in spirit, but can differentiate in strength, timing, and consistency. So I'm not going to read all this. So basically, what it is saying that the relationship between VIX and QQQ is not real. It's not what you're supposed to be, what we're supposed to be using, right? We're supposed to be using VXN. VXN and QQQ have more of a direct negative correlation, or at least a more clean relationship than VIX and QQQ. Empirical correlation. All right. So bottom line, VIX and QQQ have some negative correlation, especially via the volatility instruments like VIX, right? But there's less direct slash somewhat weaker noise than VIX and the S&P 500. So when we're creating our strategy, it is typically best to be able to do VXN and QQQ as opposed to VIX and QQQ, right? So when I first started this, I thought that, okay, you know what? There is that correlation between these two. I didn't know, and because you can only have two open at the same time, so that's why it's grabbing. But nonetheless, I didn't know that QQQ is on the Nasdaq, so that's one thing we had to be able to figure out. Number one, and number two, that there's this inverse. Okay, all right. Let me just close VIX. Let me just close those two down right now, because this is just getting ridiculous. I'm just asking for four windows, bro. It's not like I'm asking you to do anything. Just give me the price of four windows. All right. So we see that there's that relationship between the two, right? So now I want us to be able to understand, okay, what is implied volatility, right? So implied volatility. Volatility is just a fancy word for how wild or how cost something is, right? If stock market moves like a turtle slowly, then that's low volatility. If the stock market moves like lightning, fast and unpredictable, then that's high volatility, right? IV doesn't look at what already happened. It looks at what the market thinks might happen next, right? So IV doesn't look at historical. It looks at, okay, what's coming up next, my G, right? It's like a weather forecaster for the stock market. High IV, people are expecting big moves and a storm ahead, right? Low IV, people expect calm ahead, clear skies. So here's the key for us, right? IV comes for option prices. When traders pay a lot of money, it means that they expect big moves. When they pay a little money, they expect little moves and expect it to be quiet, right? So, an out of the box analogy, think of IV like a mystery box. If people think nothing crazy inside the box is like a pencil, they're not going to pay much for it. That's low IV, right? So we have our mystery box. If there's only a pencil or a rubber band, something very simple, right, in there, that's low IV, right? But if we think that there may be something exciting like $100 or a big surprise, right? Everybody wants a chance to be able to buy. The price goes up, and that's high IV, right? The box hasn't been open yet, and that's why I think it's almost like Schrodinger cat, right? But the difference is Schrodinger cat, like if you the cat could be dead or alive, right? If you open it, you kill the cat, or if you didn't open it, the cat is still alive, type shit, right? So I think we can be able to apply that there, or maybe we can't. I don't know. Maybe there's some correlation there, maybe not. If you think so, let me know. If you but you want to be able to open the box like you paid for it, so you kind of so maybe not Schrodinger's. Never mind. The box hasn't been opened yet, but everybody is expectation is already in the price. That's exactly how implied volatility works in the option market. The higher the expected surprise, the higher the IV. The lower the expected surprise, the lower the IV. So IV affects how the expensive or cheap options are. High IV options are expensive because big moves are expected. Low IV options are cheaper because it's calm, right? Nobody thinks anything's going to swing as well. Even if the stock market doesn't move at all, if IV drops after you buy, your option value becomes worthless. I'll say the worthless, but you lose in value quick. So let's say QQQ is at 400, IV is low, option might cost remember a dollar, if that what that dollar means, right? There's one for one option contract, there's 100 shares, right? So we're going to take that dollar, right, our bid, because that's what we're buying, times 100, right, because it's 100 shares in one option contract, and that's $100. So that's what our option contract is worth, right? And that's a low IV environment. But in high IV, right, CPI, consumer price index, or FOMO, right, fear of missing out, right, same option contract, almost $150 more, 250, right? Same example. Instead of using the two, we're going to use 250. Let me get that right. 250, right, times 100 equals 250. High IV environment. High IV environment. Environment. There we go. All right, do we get that? So volatility is how much something moves. Either it's going to be fast, slow, or fast and sharp, right? Implied volatility is how much people think, right? Implied, you think, right? Implied volatility is how much people think is going to move in the future. The mystery box excitement, right? So high IV, big moves are expected, expensive options. Low IV, calm, cheaper options, right? So we talked about. Now, I just want to get a little bit more into VXN, right? So VXN is not a stock, it is and not an ETF, right? VXN is a volatility index, just like VIX, right? The full name is the CBOE, Chicago Board Option Exchange. I think, yeah, Chicago Board Option Exchange. There it is, Chicago Board Option Exchange, right? NASDAQ 100 index, right? Tracks the expected 30-day volatility of the NASDAQ 100, which QQQ follows closely, created by the CBOE based on prices options of the Nasdaq 100. So VXN measures market expectations, not the price movement of the company or the fund. Because it just calculates the number, it's like a speedometer. It's not a tradable asset. You can trade instruments that are related to VXN, like the volatility ETP or the options and futures on NASDAQ 100. You can use VXN as a signal in your trading, right? If it's greater than 25, so on and so forth. So, one thing I want us to be able to understand a little bit more, what are the VXN ranges, right? What are the VXN ranges? What is considered high for VXN? Should have said cite your source. All right, cool. That's an important question. So VXN is very high in stress periods. 71 after 9/11, right? 79.86 after the '08 crisis. COVID, it was 80. The lowest recorded VXN level was 1031, and that was March of 2017, right? Most recent, the typical ranges over the past year, the 52-week range is, damn, 52? 15 from 5217. On investing.com, it notes that the extreme low readings are usually below 15, extreme high are above 35, right? On bar chart, the 52-week low was 1505 and near high was 5217. So VXN oscillates from less than 10 in very calm times and approximately greater than 10 in extreme times. And normal to elevated regimes, this is what happens. So low volatility, complacency is less than 15. Market is calm, boring, probably weak for aggressive OTP plays. Moderate, normal, 15 to 25. Normal trading environment, some movement, but not huge panic. Elevated slash high is 25 to 35. Market stress, higher unexpectancy. So where is that right now? We're at 25. We're at 25, 26, right? So we're couched right here. We're elevated, right? Market stress, high uncertainty, good regime for aggressive strategies. Extreme stress crisis, right? Very choppy, might have big jumps and big reversals. High risk but high opportunities. So many sources, uh, a VXN above 35 is considered very high and a danger zone for uncertainty. Normal elevated volatility for your purposes, something like greater than or equal to 25 is often seen as a threshold where things start get interesting. This aligns with what you already thinking with a VIX of, now VIX is not going to work. That's why we need VXN, right? Some caveats you should pick for your threshold. What's high, depending on recent baseline. The volatility has been low for months. The VXN of 22 might feel high. Beware of spikes and false alarms. Sometimes VXN jumps and then retreats. Use confirmations and hold for thresholds for a few minutes. An extreme crisis zone, VXN may overshoot, and option behavior skews and spread limiting liquidity might be different. Because VXN is expected future volatility, it can rise before the price starts moving, which is good, but sometimes it overshoots it. In summary, normal VXN is from 15 to 25, elevated is above 25, and high risk, right, is anything from 35 plus. So I'm going to take that. I'm going to put it in our notes here. All right, so we can understand VXN a little bit more, right? So we can refer to this when we're actually developing our strategy. All right, perfect. So now that we understand the basis of it, now let's go to the actual strategy, right? And how we're going to be doing it and what we're going to be doing. And how we're going to be doing it. And all right, bet. So I just want to make sure you can hear me. My levels are Gucci. Let's go to the actual strategy. All right, and here it is. Whenever you see, okay, matter of fact, let's just do this. Perfect, perfect, perfect. Um, so now that we know that we're supposed to be using VXN and not VIX. Let's update the strategy to reflect it and explain it to us under the same guidelines so we understand it. 12 analogies creative. All right, so VXN is high, which means so big picture catching the tech tsunami, right? We should call it. I'm still gonna call it. Do we call it surfer? I'm just gonna keep it called sprinter right now. Maybe I'll call the bot surfer or some shit. Or I can remember somebody one of those names. It's like on the tip of the pause. But when VXN is high, it means that the tech market led by QQQ is nervous or wild. Like VXN, think of VXN like a storm warning siren for NASDAQ. When it goes off, big waves are coming. This strategy tries to surf those big waves using QQQ zero DTE, days to expiration options, options that expire the same day, right? You jump in when the market starts moving fast and you get out quickly before the wave crashes. Fast in, fast out. Max hold time is 30 minutes. The goal is to catch fast moves and to grab anywhere between 25 and 75% gains and protect our capital. Trade only when the market is excited or scared. VXN of 25, right? Ride those quick moves using same day option strategies. Avoid getting trapped in sideways chops or theta decay. Think of chasing a roller coaster right before it drops. And if you miss those moments, don't run after the ride, right? Volatility mode on. We only trade when VXN wakes up. This is like going to the skate park when the ramps are big. VXN storms warning issued. Optional VXN spikes 1 point. This is another indicator that I'm probably not going to add, right? This is just a confirmation indicator. Our main entry indicator is right here, right? We need VXN to be above 25. So we look at VXN right now, we're in our zone because I think we're going to be in a high volatility zone these next couple of weeks, if not months, right? Especially give and take the government is shut down, the U.S. government shut down, that is, right? And there's a lot of uncertainty in the air, right? So I think being able to have a strategy that can be able to capitalize off these moments is going to be very key, right? And we never know what's going to happen tomorrow. So VXN holds elevated for at least 1 minute, right? 1 times 5 minute bars to filter out the fake outs. Analogy, it's like a tech ocean. If it's calm, VXN is less than 25s, you chill on the beach. But if the storm horn blows, VXN spikes, you grab your surfboard, right? Call or put. Once the storm starts, you have two plays: bullish or bearish. Breakdowns, right? Markets panicking, call puts and calls, right? So let's break this down so like we can understand it minute. You really can't see that. Hold on. Let's do this. Boom. Let's come back over here. Excuse me. Perfect. So let's do this way. So puts, right? We equal bearish, right? Equals we think the market is going down, right? So if QQQ breaks down, market is panicking, right? And this is strategy specific, right? Now, bull, but call, right? Equals, excuse me, calls equal bullish, right? And we think the market is going up, right? And this is strategy specific. Hold QQQ holds and bounces, and market is fighting back, right? So we're going to be doing either play, right? It's going to be it's not just calls, right? And puts or calls. So we can be in a bearish market and a bullish market, right? As soon as we see those elevated levels, we can be able our strategy or our bot is going to be able to jump in and being able to ride that momentum either way, right? All right, let's keep going. Technical confirmation. So the VWAP breakdown or rejection. VWAP is the volume weighted average price. Volume weighted average price. VWAP. Volume weighted average price. Yeah. And we're going to get into that in a little bit. 912 EMA. So exponential moving average. EMA, exponential moving average. And 9 and 12 is how many days you want to be able to do it, right? Volume spike means reaction. 1 minute ATR. ATR, average true range. ATR, average true range. Show the expansion, not stuck, not sideways to fight in the mud. And we're probably going to tweak these a bit when we're actually back testing. So it's going to be cool on how we're going to play this out. So analogy, if the weights breaks down, write it down. If it bounces up, write it back up, right? So choosing the rocket, 0 DTE, strike at the money, or 1+ strike. So let's talk about that. At the money or out of the money, right? So the current price of QQQ is 605.33. Current price is 605. They just put 605, right? So when you're talking about calls, right? So the current price is 605. So let's do this. So when we're talking about calls, we're going north. I should have grabbed my arrow. Let's grab my arrow. No, I did not shoot. Arrow pointing up. Perfect. Let's just go grab our arrow real quick. Which one looks cool? Give me a second. I want that one. I'm all right. Let's grab our arrow. Let's turn our arrow. Boom. And 180. Perfect. So we're talking about at the money. Um, really, it's not really called. I mean, at the money or in the money or out of the money. Strike prices, right? So let's talk about it. This is going to be low key, maybe. I'm going to figure out a way where jitters is going to stay. All right. So calls, remember, calls, we think we're bullish. We're bullish on the market, right? So we think it's going to go up, right? So the current price of QQQ is 605, right? So if we are wanting to say that, let me do something real quick so JIT doesn't move. Never mind. It's just gonna move. Whatever. So we're bullish on it. QQQ, right? We think it's gonna bounce back. So anything that's in the money, right? So I usually go two levels, right? So anything from 606. Let's do this. All right. I'm gonna put it back when we're done with the example. So 606, 6 607, right? I would consider that in the money, right? So these are our in the money. Wow, this is going to be fun. In the money and in the money, right? So in the money basically means that the stock price, we're moving two levels up, right? And we're still in the money, right? So out of the money means that we're two levels and more above, right? So anything greater than or equal to 608 for me, right? I consider that to be out of the money, right? And this is for calls, right? So let's say duplicate, boom. So let's say if we have one for puts, right? It works the same way. Current price is 605, right? So boom, 603, 604, my fault, in the money. 603 in the money, right? Anything less than or equal to 602, it's out of the money. Out of the money. Perfect. Does that make sense? Right? So it can go either way. We can go up and we think it's calls, right? We're bullish on the market. We're down, we think we're bearish on the market, right? So that's our in the money, out of the money example. Got it? Perfect. Let's keep going. So that's when you say at the money, right? Two levels right here. This is our zone right here. At the money, right? This little box right here. Let me get a box. Box. All right thing. Oh, okay, I'll take that. Perfect. Our zone. Yeah, just follow me. Just follow me. Damn, you ain't gonna listen, are you? All right, this is. I know. Hold on. I'm gonna make it work. Wait. Okay, that's not gonna work. Are you gonna work? Perfect. Okay. Okay. Oh man. Okay, hold on. You're not gonna work. How do you? I feel like we can trace one. Can we? All right, hold on. I know we could freehand this real quick, but give me a second. But just give me a box. Uh, tool. Do you have a shape maker? Line. Boom. We do. All right. I know this is like past the point of what we're doing. Y'all just bear with me. We're gonna make our own box. Perfect. All right. We're gonna make our in the money zone. Just give me a second. Almost there. We're going to make our in the money zone. And you're right there. You're right there. Let me duplicate you. Bring you over. All right. So this is our in the money zone, right? So whenever you see at the money, here's your zone right here. Okay, let's get you right. Boom. Right. So here's our in the money zone, right? Two up, two down. Make sense? I like the whole visual cue, so that works for me. All right. So let's talk about with higher delta. So we didn't talk about that. So let's talk about the delta and the gamma real quick, right? So what is delta? So delta equals probability of profit or or the relation of the option contract, the relation of the option contract movement compared to the compared to the stock price. What do I mean? So let's say we have a delta of zero point 0.4, and delta is usually whoa, whoa. All right. So delta is either going to be gang right here or just delta, right? Not the airline. All right, come on, gang. Just listen to me. Follow me. Don't follow me. Follow me. All right, perfect. So this is going to be delta, right? So let's say we have a delta of 0.04. I should probably move you over here, right? Because we're going to be typing. Delta of zero point 0.4, right? So this tells us that we have a 40% chance, 40% chance of profit, or remember, one option contract equals 100 shares. What is it? One option contract equals 100 shares. What is the color you can see here again? I think it's orange. Orange would be good. Yep. One option contract is 100 shares, right? So what we're doing with our, we have our probability of profit, right, at the 40%. Now we need to be able to figure out, all right, for every $1 movement, let's do this. For every positive $1 movement, the option contract the option contract will move $40. But wait, how does that make sense? Right? Let's break that down. Remember, we have 100 shares in one option contract, right? And we're going to multiply that by zero point 0.4, right? Then that's 40. So that tells us, right, that every time the stock price goes up $1, we're making $40. But that's also the inverse too. Delta gain can also be negative, right? Right? You'll see that in puts. You normally see the positive in calls, negatives in puts, right? So delta can also be negative gain. Now if delta is negative, what does that tell us? So that tells us that or for every negative $1 in movement, the option contract will move negative, right? Negative $40. Let's do negative, not underscore. Negative $40, right? So you understand that. So now delta is again probability of profit or the relation of the option contract movement compared to the stock price, right? Now gamma is going to tell you how fast or how slow delta is going to move, right? So delta could be running. I'm talking about Usain Bolt sprinting, or delta could be the tortoise. Excuse me, the tortoise, right? Could be as a not even moving at all, right? So gamma is the rate in which delta is going to be changing, right? And delta is the probability of profit or the relation of the stock price movement compared to the option contract or compared to the stock price. Got it? So at the money, ATM at the money or in the money, a rocket is in perfect amount of fuel, strong lift, and fast reaction. Out of the mummy, out of the money, rocket is too far away, might not launch off. Right? This is our in the money zone. Remember, our in the money zone. So if we're in this in the money zone, the rocket is ready to go. Right? If we're too far out of the money, then you better be sure of what you're doing. Right? And so that's where we're creating a bot to be able to trade this for us. Right? We're risking only 0.5 to 1% per trade. Only trade one at a time. No doubling down in chops. Option scaling, take half profit at 25%, and let the rest ride. Hard stop loss at 30%. This may be changed. Best conditions, the perfect storm. High. Okay. All right. So are we ready to start back testing? So before we do that, remember backtesting options. Backtesting.py doesn't work. Backtrader doesn't work. Algo trade doesn't work. Vector BT doesn't work. Right? What's another one? I think there's like another financial whatever the fuck. Right? That doesn't work. Right? If you think that backtrader.bt, I want to do a video on this so you can actually see or like a live stream on this. You got to create your own backtesting file, and we have that here, right? So that's spent the time to be able to create our own backtesting file, and this is just another strategy. This is our lotto baby strategy, right? That we're using in order to backtest. But before we start backtesting, remember we have to treat the AI, especially when it comes to coding, like we're in a deposition, meaning that you ever seen those television like Suits, right? Like you're in the room, right? 9 times out of 10, let's just say 80% of the time, right? 75% of the time, right? The attorney, lawyer, so whatever, right? It's not going to ask you a question that they don't already know the answer to, or a very preconceived notion of what the answer to is, right? So that's what we're going to do here. Like I know what the answer is, but the AI doesn't know what the answer is. So we're going to ask it a question to be able to build that context. Once we build that context, then we can continue with coding, right? So you don't just want to say, "Oh, Go run this back test on this file, blah 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 blah. Right? If you know how to be able to do it better, then let's go. Let's do it better. So we're building the context once we built that. And what you see here is, bruh, I had to go through some. I had to go through something to be able to find this VXN data. We found it. I was able to get it through bar chart. How ironic! Was able to get it through bar chart. And I already had the QQQ through Theta data. Right. So if you want to follow along, you can get the VXN easily through bar chart. It is not hard, right? You can download it via their web interface, and you can get QQQ data, right, from Theta data. All right, cool. Let's go ahead and continue. Before we proceed with back testing, we need you to uh, review the reference file and explain to us like we are 12 and make sure I want. What if I put 132? Never tried that yet. If only tools I can make sure to use proper analogies so we can ensure we are on the same page. All right, then we are going to load our strategy. The only thing I'm not going to do is take this that extra indicator. I'm not gonna hold you. I would rather not right now and just keep her super simp. Keep her super simp for right now. Then we can adjust accordingly after that. We can adjust accordingly after. Damn, bro, I didn't think you need that many tokens. I should have limited you. And normally I do. But I'd be like, all right, you can only use 340. All right, here we go. Let's see what it's doing. Imagine you're playing a video. Excuse me. Imagine you're playing a video game where you bet on a short-term guess about whether a price is going up or down. Here's how the game works. Start with $100 and start. Okay, this is talking about an option trading our strategy. Okay. No, we wanted you to understand how to use how to create a backtest for option trading strategies. This is a reference file for how to create a backtest. We noticed that backtesting.py, backtrader, vector, bt, frequent trade, and other Python libraries are not native to option backtesting. This is why we created our own custom one, hint the name. Now, do you understand how it works? Before we proceed with the strategy we are going to be backtesting, advised via TLDR. Oh, whoa, 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 whoa. Excuse me. I bet it's doing the most. How to build a custom trading strategy. Um, built your own using pandas and pure Python. Data loading. Blah blah blah. Look back 5 minutes. All right. See what I mean? Custom. not supported. Option trains not supported. DTE zero DTE logic not supported. And you damn near got to start with $1,000, $10,000, right? Like you can't manipulate the starting capital. That's one thing that I really didn't like about it. Um, all right, all right. Sounds like you are gaining the proper context. Now here is the strategy we want to backtest. Let's discuss the game plan on how to do it, starting with 2024 data, QQQ plus VXN. Before we proceed, only use 300 328 total tokens for output response. Let's get it, shouting. Excuse me. Now, y'all notice it using think, right? Did I say think? Or is there something in there that said think? Whenever you say think in Claude code, it's going to. I'm gonna. Okay, I guess I'll start using it more. So you can actually see how it works, and it's kind of cool, right? Whenever you put think with inside Claude code, it's going to actually take its time and think about the next step, right? Think about, okay, this is what you want to do. Now, how can I do it, right? Type shit. So this is the data that we're going to be backtesting. It knows it because I had it clean and sort the data, right? We've already, again, we're pulling QQQ. Okay, maybe I need to tell you. Okay, this open, high, low, close. That's where you see OHLCV. Open, high, low, close, and ET is Eastern time. Open, high, low, close. That came from IBKR, right? Super easy to get. QQQ, Greeks, and this is option data. Greeks and quotes, right? This came from theta data, right? This came from IBKR. This came from theta data. And this came from bar chart, right? Wait, did I say that right? Yeah. Bar chart, VXN, yeah, because that's VXN. VXN is bar chart. This is IBKR, and this is theta data, right? So VXN 1 minute intraday. VXN triggers 25, VMA, EMA, EWAP confluence. I don't think we're going to use all of them. Remember, volume weighted average price, exponential moving average, average true range, right? I don't think we're going to be using all three, but again, let's just start with this. We're going to probably make that a lot more aggressive, right? Variable take profit, whereas there's a fixed take profit here, right? Max hold time is 30 minutes, whereas 20 minutes for our lotto strategy, and we're QQQ instead of SPY. All right, add VWAP for open, high, low, close, add EMA 912, 921. I really think we need to be a lot more aggressive, but let's just see. Let's start with this, and then we're going to actually go to the tuning part because I really think we need to be a lot more aggressive. I think it needs to be at like 5.8 or something. So we'll see. At the money strike closest to the QQQ price, delta of zero point 0.4. Okay, lotto jumps premium, right? Exit. Okay, training, then valid. Remember, this is how we backtest. Our backtest is to split up the year, right? The first half is training, the second half is validation. This is how we always do it, right? Entry window, volume spike, right? Okay. All right, hold on. Only thing else is starting capital is going to be 100, and we need to be able to track P&L, right? We want to see the first winning trade, first losing trade, and detail trades. Make sense? Hold on. And it also, you also should be, okay, perfect. And make sure that we're getting the metrics as well. and make sure we are getting the end metrics as well, as seen in the reference. Are you ready to go? Advise before we get started to ensure we are on the same page. Because if you don't let it know, it being the AI, if you don't let it know, hey, my starting capital is this, right? It's gonna put $1,000. It's gonna put 10,000. It's gonna put 1,000,000, right? But remember, this strategy is we want to be able to trade with the starting capital of 100. Remember, that doesn't mean we're going to use the entire 100 every time we light this thing up. No, but what it does mean is that this is where we start, and I want us to see how we're going to move throughout the process. All right, wood print, beautiful, and then the trades. All right, starting capital is $100. Clarify with $100 buying at the money QQQ. Need at least 50 to $100 per contract. Lower the premium or start with higher capital. Okay, let's talk about this real quick because I thought we already fleshed that out, but I guess we didn't. Um, trade tracking, clarity. Okay, all right. Before we proceed, we want to be able to have this strategy perform well or exceptional at being able to grow being able to start with a portfolio balance of $100, right? So let's discuss what we need to do. Would it be going a bit more out of the money or lowering delta premium? Let's discuss before we proceed. Proceed, cite your sources and response, and advise via TLDR. Now let's check the output. Let's check the output. Excuse me. All right. The math doesn't work. Go further out of the money, lotto style. All right, trading at QQQ is between $410 and $510 for 2024. Options are $2 to $8 per contract, $200 to $800 per position. But the $100 can't afford the point 0.5 contract, impossible to trade. The current out of the money, delta, premium, the math doesn't work. Go further out of the money, lotto style, reference, pros and cons. Lower delta means bigger QQQ moves, higher theta decay, time kills you faster, lower win rate, but bigger moves when you're right. All right. Tighter out of the money or dynamic selection. If this is just going to be a bit more, reference the VIX filter. Let me check the QQQ premiums. Look, 5, 15. Okay. With the premium inflates, my recommendation is 2 plus 3. Adaptive strike selection based on VXN. So $15, 15%. Max hold for 30 minutes. Perfect. Never trade. No. Um, all right, we are good with this, but we want the strategy to be able to trade when volatility is high. That is the whole point. That is the whole point, or one of the main points of creating this strategy. So, advise how we can do so using the adaptive OTM approach, out of the money approach. And then cite your sources only using 328 total tokens for output response. Let's see if it listens this time. I ain't gonna hold you. I told you I did it. I ain't gonna hold you. I ain't gonna hold you. I told you I did it. Excuse me. Reference max entry, VIX too high, avoiding stormy, RVXN, minimal, optimal, sweet spot, VIX too low, North Storm skipping, extreme, cite the adaptive, Y, VIX tighter strikes, VIX moves bigger, faster, bounce in 30 minutes possible, deep out of the money, can go in the money quickly, closer strikes, higher win rate, explosive moves, premium inflation, even out of the money can cost. All right, buy at 28, okay, 85 strike in 15 minutes, that's 140. Oh, look at that. All right, let's call. All right, perfect. Let's call the back test. I would say Silver Surfer, but um, Vol Surfer. Vol Surfer BT.py, and let's proceed to get this done. This is going to be fun. Running our back test. Yeah, we running. So you see how we're doing that, right? This is my process, right? I don't just go to jumping in the code, right? We have to be able to flush a couple things out. We have to be able to make sure that, all right, this is the idea, how we can make sure that it lines with the expectations of the market. Oh, it's about to be. See, I don't know QQQ levels that well yet to say, all right, this is it, but I'm going to learn it. Not like I know SPY levels, right, or VIX levels, but I'm going to learn it. And once we do learn it, we can reference it. I guess during this back test, we're going to be able to see as well. So I'm interested. Excuse me. We're working on creating a back test right now for our QQQ. Oh, let me get this right. Wait, come on. Hold on. Here we go. There we go. We're creating a back test right for our QQQ volatility strategy. That still looks like it's wrong. There we go. Okay. Give me some kind of. There we go. All right, here we go. Our QQQ volatility strategy, right, is going to be 0 DTE. So what does that mean? Same day expiration, right? And we're going to be trading when we're at elevated, meaning that when VXN is above 25, we want to be able to start trading, right? Maybe we can be able to bounce around here too, but we'll see, right? I want this to be our high volatility, right? Whenever the stock market is up and it's jumping right now, just like right now, GOB in the market, right? Whenever it's up and it's moving, I want this strategy to be able to move and to have better play. And we figured out that the VXN is a better correlator than using VIX, right? We talked about calls and puts. We have our out of the money and the money zone. But right now, since we want the strategy to work, we're going to be out of the zone, right? So we're going to be working with out of the money contracts, right? We talked about our delta. So now we're working on being able to create the strategy. So excuse me for a second. So we have it. Now we're actually running our back test. I'm just reviewing the code real quick. But if you do have any questions while we're going through this, please feel free to ask. You ever had that ask teacher? Don't ask me, ask me. Never mind. So I'm just reviewing the code real quick. If you do have any questions, please feel free to drop them. And we're running the back test right now live, right? So I want to review in the code. So excuse me. I feel like a cough is coming. Hold on. But we're going to see. And I think we're going to need to tune a few of the other parameters as well, but we're going to see. So we're going to run the back test again. Yeah, I still think that needs to be a little bit lower. Um, I'm not gonna hold you. I still think that needs to be lower, but let's get it, shouting. Excuse me. running our back test, running our back test on our QQQQ volatility strategy, I think that there are a few too many breakout one has a so I'm just waiting for the back test to finish, and once the back test finish, we're going to be able to go through this a little bit more. We're just waiting on the strategy to finish up the back test. We just started it. There we go. Talk to me nice. Let's see how it's moving. We just had it finish up the first half. Now it's finishing up the second half, and now it's going to output. All right, the VIX. All right, before you keep, the issue is that the VXN storms are present, but no valid entries. The signal detection is too strict. The filters for VWAP, EMA, and ATR and volume are rejecting all candidates. Let me relax. Can you explain how the VWAP, EMA, ATR, and volume are needed for entries before we tune and adjust? All right. Let's look at it. Let's look at it. Why VWAP, EMA, ATR involved are needed for entry explanations. If we only have the VXN to enter trades, we enter every single minute when VXN is high. Could enter during sideways chop, no momentum. Could enter during a fake out, no volume. Could enter during the wrong time against the trend. Results in tons of losing trades. Accounts getting blown up 5. We need all four filters to agree before entering. It's like a checklist before taking off. VWAP, what is it? It's the fair price based on the volume trade. Why we need it, it shows if we are above or below the equilibrium. The price above, call, put. Analogy, VWAP is like a center line in the river. If the boat price is above the center, expect it to keep going, call. If the boat is below the center, expect it to keep going down, put. Without VWAP, we might buy calls when the price is crashing through the support. Support is floor, resistance is roof. Support is the floor. I had a nice little chart. I showed this. Hold on, let me see if I can find it. Support. Give me a second. I did have. Oh, there it is. Is that it? Nope. Give me a second. All right, here it is. Remember, support, floor, right? This is when you buy. Resistance, this is roof, right? This is when you sell. Support, floor, resistance, roof, right? So that's when it says, excuse me. We talked about when it's crashing through the support floor, right? EMA is 5 9 periods and 21 slow. Trends indicator why we need it, confirms the direction of the momentum. Fast line is above the slow line, only calls, but when the fast line is below the slow line, only allow puts. Combined, VMA plus VWAP equals double confirmation. Analogy, EMA is like checking when the wind is checking which way the wind is blowing. Don't surf against the wind. Wait for the wind plus the wave alignment. Without EMA, we might enter calls during the wrong trend direction. Volume spike, what it is. Current plus average volume, why we need it. Real breakouts have predict participation, money flow in, right? Logic, look back, entry, current volume, volume ratio, right? Volume ratio is 1.2. I think that's volume is not 1.2. Average skip. I think we could get that down a little bit. Analogy, the crowd size of the concert, big crowd equals high volume, real something happening. Empty venue, low volume, fake move, ignore it. ATR, the average true range. This measures the volatility, the price movement range. We need it, confirms that the market is actually moving, not stuck. Okay. Without it, we enter during tight consolidations and get chopped up. All right. Um, Storm mode is on. 2 out of 5 signals qualify. All right. We want to try a bit more aggressive thresholds or parameters. Let's do 0.88x for volume multiplier. Um, zero point 0.2 for price threshold, and ATR, let's do 0.88 for ATR expansion and review results. Oh, I want to do, let's also do a faster EMA. That 921 is not going to work. I'm just going to let you know that right. No, the 921 EMA ain't going to work, homie. So I'm gonna need you to update that too. I'm going to need that. I'm gonna need that. All right. And let's go ahead and run the back test. Oh, what are the EMA? EMA, I say, um, let's do a faster EMA. But what is it? You didn't tell me. Okay, hold on, Jit. What are the EMA levels we are using? You just put fast and slow EMA, but what is the levels? Not still 921, is it? Sometimes you gotta check, Jit. I gotta check you, cuz. See what's happening. You're right to catch that. Let me check what I said. Could have messed up my whole little strategy, fam. Oh, 513. Okay, perfect. I already changed it to 513 faster than you requested. All right, run it. Already changed it to 513. Faster email as you requested. This is more aggressive, quicker, price. Okay. So we can understand, all right, what is the difference between 513 EMA and 921 EMA? And make sure to explain like we are 12 so we really understand it. So you're seeing some live tuning, right? We're optimizing tuning, right? Think of EMA like a smooth line that follows the price but reacts at different speeds depending on how fast or how slow you set it. Fast versus slow EMA, the speed game. 513 EMA combos reacts fast. 921 EMA combos react slower. Because a smaller number, 513, only looks at the most recent bars, bigger numbers, 921, look at more candles so they smooth things out more. Imagine you or your friend are following a bouncy ball. Your friends with the 513 EMA is reacting immediately to every bounce. You with the 921 EMA is moving a little bit slower, wait to see if the bounces really matter. 513 5 EMA follows prices very closely, short memory. The 13 EMA follows prices, but it's a bit more relaxed. When 5 EMA crosses above the 13, it often signals a short term momentum up. When 5 crosses below, right, the 13, short term momentum down. Analogy, think of the 5 EMA as a fast car and the 13 EMA as a truck. If the car zoomed past the truck, the direction is changing fast. 921 EMA, 9 is still fast, but it's not hyper fast. 21, much slower, smoother, and more stable. When the 9 crosses the 21, it usually signals a strong, more sustained trend. The 9 EMA is a speedboat, and the 21 EMA is a cargo ship. When the boat overtakes the ship, which should be, right, the whole tide might be shifting, not just a splash, right? Quick entry, scalps, short bursts, trend confirmation, cleaner moves, right? In your strategy, a 513 EMA can be used for early warning signal, tells you when momentum might be starting. A 921 EMA can be used for a green light confirmation, tell you when the trend is actually strong enough to ride. Imagine 513 spotting a wave early, 921 committing to ride, right? We got it? Beautiful. Genius, bro. If you don't, and I love it because what we're doing, I think this 513 EMA is going to slide. It's just a matter of being able to make sure that JIT is going to run. Give me great news. And the other parameters that we set, zero trades, even with the ultra aggressive parameters, the issues that even with the 20, the signal still rejecting odd entries. Let me debug why failing on April. Okay. What am I looking for? OU. Oh, prices moves are too small. The price moves are 0.52 below the threshold mean bar. Okay, even with the aggressive zero point 0.2, the 1 minute bars don't move that much on the 20-day. You need to lower the price threshold even more or remove it entirely or rely on other filters. Recommendation, remove the price threshold, essentially any movement, and let the VWAP, EMA, and volume do the heavy lifting. All right, let's drop it to, you said 0.05, let's do 0.03 and gauge results. Also drop VXN to 18. You. Oh, we need our journal. We need our journal. Surfer Bay. We need our journal. Whoa. I'm interested to see how this is going to work out. I think this is going to be a lot better. And this is back testing, right? And I'm going to have us because it's about to. I think I should just let it calm down. No, I think after this one, go write your notes, and then we can continue with the other ones because I don't want to not have the notes of what we did so far. So I'm going to go write our notes after this, and after we write our notes, then we can, in another session, continue what we're doing. Because JIT will do too much. Said JIT will do too much. Yeah. Take a for me. Oh, 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 oh. Give us a second. What am I looking for? Oh. Whoa, 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 whoa. No, I need you. This will do. Damn, kid. Damn, kid. I told you that I would be there. Excuse me. Talk to me nice. All right. Nope, nope. Okay. Review as a reference. Then let's create the journal log for what we have done so far for Ball Surfer. Update so we can use and understand the journey of this strategy. Make sure to include what we did for each test so far, and we before we proceed. I appreciate you. Go ahead and give me my journal. As soon as you give me my journal, then I'm gonna thank you for your work. Um, oh, whoa, 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 whoa. Oh, whoa, whoa. It's a lot cleaner, fam. It's a lot cleaner. All right, all right. It's a lot cleaner. Whoa, 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 whoa. Dope. All right, there we go. I was about to say. I was about to say. I was about to say. Thought I had me some OG. Compacting conversation. Damn. I was trying to do it before you compact, and guess what you did? Compact. I don't know if that's irony. Hmm. I don't know if that's a little bit of irony. Ernie. Whoa, 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 whoa. All right. I appreciate you, gang. Boom. First time compacting today, though. Maybe second. I think this is the first. This is the first. This is the first. But da da. This is the first. But All right, there we go. Finally, we're able to compact here. I'll complete the Surfer Bay by writing. That's interesting. So you're just gonna take all the contacts from JIT. Reference file, Remelo conda environment, Remelo.m. All right. Excuse me. You ever cough so much that your chest hurt? Just a little head cold, man. Whoa, 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 whoa. Here you go, beautiful. There you go, precious. There you go, beautiful. There you go, precious. There you go, beautiful. There you go, precious. Whoa, 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 whoa. All right, if we can. That's crazy. That's what made JIT compact before. The file doesn't exist. JIT, yes, it does. It just doesn't have anything in there. No shit. Take a shot for me. Huh. Whoa, whoa, whoa. What I am, I guess what I was supposed to do is maybe flush out the IBKR stuff, but we'll do that on Monday. What I really want to get done this weekend is being able to have 3 ironclad bots ready to go on Monday. So all we're doing on Monday is running back tests, updating, running back tests, tuning, running back tests, and tuning. And that's it. I don't want us to create another strategy right now because we're going to have three. Um, so running back tests and tuning. That's what we're going to be doing. Core when okay. Third iteration. Key findings that 44. Okay. Require multiple signals to align may reduce false signals. Reality check. Test simplified entry to yeah, I fucking agree, bro. Um, let's just do EMA plus VWAP. All right. All right. Current blocker is the faster EMA. Multiple. All right. We want to try only VWAP plus EMA. Remove the other filters, volume, and ATR, and let's gauge results. Mm-hmm. Mm-hmm. Take a shot from me. Oh. Open questions. No. I think that is it too. The inverted wrong way approach. All right, I'm gonna let this run. We'll be right back. I'm gonna grab We got 15 trades. We got 15 trades. 15 trades with a simplified VMA and okay. Win rate is 40%. Return is negative 51. Profit 6 winners, 9 losers. Keep finding, removing the ATR. Filter the allow trades to execute, but the 6%. Wow. Okay. Average hold time is 8.5 minutes. I'm fine with that. Um, Before we begin to tune, let's run on 2023. Boom. Here is 2023 and 2023. We're going to run it on 2023 and then see the results. And then review, and then we're going to tune from there. What's the point of tuning now? All right, this is good. I mean, it's not great results when we first start. I ain't gonna hold you, but that's just tuning, right? To be able to have it work the way we need it to. So no quorums, whoa, no quorums, no issues. We'll fix it. Search for the pattern. No quorum's the issue. We have fixed it. All right, great. So we're updating the back test. We just ran it and we didn't get great results, right? I mean, but we got some results. And I think this is a good place to be able to start. We're looking at a 40% win rate, negative 57% return. We had 6 winners and 9 losers. So what this is telling me is that the strategy knows how to win, right? But we're holding on to the bag maybe for too long, or these entries are probably fake outs. So we're going to test. We're testing it on, this was on 2024, right? Now we're going to run it on 2023 and then gauge how well the strategy is doing. I think it'll probably maintain baselines, right? And if it does maintain, what we're going to do is adjust and have it work accordingly. So this is the part of being able to backtest your strategy, right? That sometimes it's not going to hit when you first run it. Sometimes it is, right? If it does hit when you first run it, eyes in the air. But if it doesn't, like, okay, let's find out why, right? Without overfitting, without introducing bias. So now, because I didn't want to keep tuning, and overfit the strategy to have it work perfectly on 2024, we need this to be agnostic, right? To work whenever VIX is above 20. We have it at 18 right now. Whenever VXN, not VIX, VXN, right, is above, 18, it's going to run. And I need it to run well. I need this to be a printer, just like we have for our SPY VIX. We have one Lotto Baby. We have another one for spreads. So this is interesting. There's just another one along the process, right? Another one along the process. And if you do have any questions for us while we're doing this, please don't be afraid to ask. We're making great headway. Great headway. Beautiful. Let's continue. Let's continue this work. Let us continue this work. We're doing great stuff. All right, we're having a back test run. Once that back test finish, we'll be able to continue on and figure out why we're at this current win rate right now. So this is where we're at. Then we're going to figure out why in a bit here after we finish running 2023. This is on 24. Running on 23, and it should finish up here. And we had to create our own back testing framework. We get not using back testing, not py. That's not, it doesn't work well with options. Not using backtrader, that doesn't work well with options. I mean, unless y'all know something different. If you have got it successfully, I'm talking, I mean, yeah, successfully mean you don't have to jerry rig it, right? To be able to work with options, I'm interested to see, right? I'm interested to see code that actually works. Back testing option strategies with backtrader. Back testing not py. I think that's going to be a long shot. I think backtrader is where we're probably going to have the most success. But again, like, you're going to need to jerry rig it, right? You're going to need to make it work for what you're doing. So I think that's why being able to create a your own custom one works out for what we need to do. So we created our own custom one. So it just finished up 2023. So let's review the results and how we run our back test. We split it up. Oh, look at that, a little bit better. So 57% win rate, right? 1.11% profit rate. Average hold time is about the same. 40 stop losses. So what we're looking at, 52% take profit 1, 4% take profit 2, 1% take profit 3, right? So we're at a coin flip. So now we need to figure out why. So higher VIX environment, 13 to 37, more trades, more profitability, fewer trades, unprofitable, right? So high VIX, she's going to be running. Low VIX, not so much. So now, what I want to do, do you think, should we go back to 2024 and figure out why 2024 didn't perform well? I understand it's low a VIX environment, right? But still, from 6 to 39, we still should be able to find room for us to be able to run, right? And I think we're going to be in this high VXN environment. So for us to be able to hit a 57%, it's still a coin flip. I'm not going to hold you. It's still a coin flip, right? But for us to be able to hit this, right, off 101 trades, 52% take profit 1, take profit 2, 1 take profit 3, right? And remember our take profit levels. I should just paste that here. So let's put our stats from current round of backtest, right? We got to get this where, my G, you were just working. Is it? Let's do this. I gotta do that, or is it just bringing you over? Okay, here we go. Boom. Ha. Zoom in, zoom out. That's funny. So we have our 2024 results. We have our 2023 results. Now I just want to show you what those levels are we're talking about, right? Take profit 1, take profit 2. That's the EMA explanation we just went over. See. Wait, that doesn't. Where are the levels from? So 25 to 60, right? So, let's just go to the code, bro. All right. Where is take profit 130%? Let's look. All right. 125%, 50%, and 75%, right? We want to be able to make 125%, 150%, 75%, right? We were able to get 1 to hit that level, 2 to 4 to hit. So 2023, um, boom. All right, for 2023, 52 hit the first level, right? 4 hit the second level, and then 1 hit the third level. So what I'm thinking is I want to find out. Yes, I understand this is a low VXN environment. I get that, right? But we still want our strategy to be able to perform well within, even if it's that low environment. So now I want to find out why is 2024 performing so terribly, right? So what I want to do without introducing bias or overfitting, let's review why 2024 did not perform well. Then let's discuss adjusting parameters so we can get the win rate and overall metrics more comparable to 2023 levels. Again, let's start with the review, then discussion without bias or overfitting. Do this objectively. Excuse me. My G, my G, my G, my G. Dum 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 dum. Oh, we have our trades, fam. I forgot that. So we have our trades we can look at. Let's look at them. Oh, that's not readable. Maybe to them. Um, boom. Okay. Let's really break this down so we can see what is going on. Okay. Y'all see that? Yes, you can. Perfect. I'm gonna get Jit on the job too. Hold on. I want to compare. I want to compare. I want to compare. So before, um, you know what? We can also try. Hold on. I'm gonna show y'all this other little this other little trick though. Hold on. We're not gonna read. I'm not gonna. I ain't gonna. We ain't gonna jump there. Show y'all this prompt that I got. I know I haven't used it a lot. Boom. And I'll drop the prompt here so y'all can use it too. And it's a prompt to be able to help, excuse me, guide, guide sessions, right? When it comes to being able to use AI. So, all right, so let's go ahead and use it. So all you're gonna do, you're gonna paste the prompt, you're gonna follow the instructions, right? So we're gonna say detail. I always like to use detailed. We're using Claude, right? Help with backtest review for um I need you I need you to summarize the strategy in 58 characters such that any LLM chat model will be able to understand it and grasp what we are doing here. Ha, I love it. Um, help with back testing, help with reviewing the back tested results for the following option trading strategy. Boom. Then it's going to output. All right. Then we have our prompt here. You are an expert quantitative. Hold on. Let me show y'all the prompt so you can see it. You are an expert quantitative specialist in option trading and strategy evaluation. I need a comprehensive review of my back-tested option trading results. Right? Boom, boom, boom. Give you context, a little bit more context. Now, what we're going to do, oh, I'm going to take the prompt, open up a new window. We're going to use, I ain't going to hold you. I don't like it. No, I'm just going to know, do what I do now. Okay, perfect. Did you paste? I don't think you did. I don't think I copied. Oh, you're doing that dumb shit where I gotta. Ah, you can be so dumb sometimes. Hold on. Hold on, y'all. Hold on. Boom. I had to paste it somewhere, go copy it again, and then paste it here, whatever. Um, here, here is the strategy. Um, you don't need this, you don't need this. Let me just delete these so you don't get confused. Um, boom. You are reviewing 2024. Review and run terminal commands and then advise of findings. Do this do this objectively without introducing bias or overfitting. All right, so we're going to have this is kind of cool. You get to see side by side how both are going to work, right? Yes, they're both anthropic. Yes, they're both uh Claude, right? Claude Sonnet, but they work differently. You'll see why. The XVN regime in 2023 averaged 24.43 versus the 20.81, negative 3.6 points lower. The volatility, excuse me, the volatility range in 2023 spiked at 29.52 versus 2024 22.51. Lower ceiling trade opportunities is 2.75 fewer days in 2024. The stop loss rate 60% in 2024 versus 40% in 2023, 50% relative increase. The target hit rate was 40% in 2024 versus 50% in 2023. Medium ROI 0.68 versus 1.25 below the break even. Winner quality, small average P&L. Why winners hit? They're smaller size, but in 2024 the hit rate was 20% more due to the lower volatility regime providing less follow through. Discussion adjustment without overfitting. Observation lower range 18.22 has less momentum follow through than the higher 24.29 range. Current the fixed stop loss at 30 gets hit more in the calmer conditions. Adjustment regime not curve fit. Um, widen the stop loss in the low regime. I thought I had my water. excuse me, you said widen the stop loss and the VXN, and then 18 with 22, currently 30%. Unchanged, tighten, and high volatility. I agree with that rationale. Low volume needs more room for mean reversion. Mean reversion to bounce back off of the mean, right? The average, right? To bounce back off of the average, to bounce back off of the floor, the support, right? So, boom, it just hit a new high, right? Now it's going to, if we have our support, that's right here, right? Just using this little example here. This is our support. So this is where we know that, okay, no matter what, it's always going to come back here. But now with mean reversion, what we want to be able to do is like, all right, bet. You just hit it. We're just using this example, not the whole thing. We're just using this little example right here, right? This little plot, this little point right here, right? This is what we're talking about. Shit. This little point. All right, bet. All right, so this is our support, right? Now, boom, just hit a new high. Now it's like, all right, I'm touching the resistance. I'm touching the resistance. Now I don't know what to do. Now it's dropping down, right? So right here, it just reverted to the mean, right? Reverted to the average, right? Because this is our new high. Just reverted to the average. Now what am I going to do? Am I going to bounce it back again, right? If I'm going to bounce it back again, now I just need to make sure that it's held a little bit more time. So we can see if this is a candle, this is 1 minute, this is 2 minutes, this is 3 minutes, right? If we're holding for a maximum of 30 minutes, right? 1, 2, 3, 4, right? We can say that, and once we get to 4, we're out, right? What's the point of holding to be able to see what it does? Once we get to 4, this is our TP1 or TP2. We've made our money and now we're clearing it, right? So what it's telling us here is that in high and low volatility, you need to be able to get just some room. All right, let's see what it does, right? Um, it's currently at 40. I mean, excuse me, 30. You're saying give it 10% more delta. All right, let's see. All right. Excuse me. Let's not confuse the word. Delta is change, but I don't want to. Let's give it 10% more room, right? 10% more room, right? Leave that unchanged, fine. And then we want to tighten it in high volume, right? So it's like once we spike, like once we hit that drop, that 30%, maybe let's call it right here, right? I'm out. I'm not trying to go all the way to this new floor, right? I'm not trying to have you revert on me, even though I know you can bounce again, right? But this is the biggest curve. I mean, you have a curve right here too, but we're just talking about this graph, this little part. Does that make sense? All right. Beautiful. So that's what we're talking about. The adjust the TP ranges. Oh, that's interesting. So you want to drop it, unchange, unchange. Um, you know what? What I want to try. Let's do. I'm gonna try something else. I'm gonna adjust the TP range. But I'm gonna do something a little different. So instead of it having what we're gonna try, and I think may be cool. Let's put it here. I'm still gonna go back there, but hold on. Boom. I want to try 1.5x, right? And then 2.8x, right? And then our stretch 5.5x, right? Oh, let's do point 0.4. Let's do 0.4x. All right. And then that's what I want to try. New TP levels, new take profit levels based on new take profit levels based on backtest results from 2024. Right. All right. So that's what I want to try. So 20 minutes. Hmm. All right. I'm fine with that. Instead of doing proposed 20 minutes of low vol, faster decay, less follow through, rationale. All right. We are fine with the widening and widening the stop loss, SL stop loss in the low VXN. VXN. Here is what we want to try and for TP levels. and proceed to adjust max hold time to 20 minutes and make sure to update to use 2024 and not 23. This is going to be interesting. So let's see how it runs. Well, this is very interesting. Well, let me check my levels because I don't trust myself to be able just to talk there and not. All right, perfect. Oh, now let's see what it said over here. Let's see this verdict. Damn, you gave me a lot, kid. Comprehensive review of 2024. I really can't see that. I guess if we do this, all right. Catastrophic failure, not just failure, catastrophic failure. Sharp ratio, estimated non-value, max drawdown. That's crazy. So max drawdown, right? Max draw down. All right, you go ahead and run it. So this strategy is starting capital. Starting capital is at $100, right? So what max drawdown is saying is that is is that at one point in time the strategy was at, so you're going to do 100 times, what is that? You said 0.6340, subtract 100. What does that equal? Like 40 some odd dollars? $36 equals $36.60, right? So at one point in time, the strategy, max drawdown is letting you know that at one point in time, the strategy was at $36, right? It lost 63% of its value. That is horrible. So no wonder that the win rate was only at 40%, right? No wonder the total return was at 53%. Look how much it has to make up. It has to get back to parity, right? So no wonder, no wonder 2024 was bad because it had to get back to parity, right? It had to get back to $100, had to make the $64 back, right? So no wonder, right? Because what we're doing here, and that's why we have to be able to go through this back test before you even unleash this thing live, right? What we're seeing is how we're going to tune it, how we're going to tweak it, right? And like to use two different AI sometimes. That's within the code, and I don't like to go to ChatGPT 5 when it comes to things like this. You'll see why. I'll use another example, not this one. I want to use what I know works. And Anthropic is a beast when it comes to things like this, especially we're using 4.5, right? So profit factor. So key findings. It started at $100. Remember, it dropped down to 36. So from the 36, it was able to get up to $42, right? It lost 57% in 15 trades. Sample period was February to May 12th, 2.5 months. Statistically insufficient. Why are you trading? Oh, because that's when fixed. So let's look at it. Average P&L was $3, negative $3.81. Negative expectancy. The standard deviation from high volatility relative to size was $12. Wrong signal losses. Worst single lost. Best single win. That's crazy. Average winner was 10. Average loser was 13. Losers are 28% larger than the winners, requiring 50%, 56% win rate just to break even. The actual win rate is 40%, right? If you take out the 16% from the break even threshold, right? The maximum drawdown, we just talked about that. Lowest capital I ever get was 3640. We just talked about. Oh, I did my math wrong. I got 36. All right. What did I do wrong? Was I wrong? I don't think so. You must have rounded up. You had to round up. I don't think I was wrong. I got 36, 30. I got 30. All right. 40. I'm just going to put a little asterisk. I got 36, 60. All right. Excuse me. All right. We talked about a drawdown. Okay, so we have our new results. Our new results are going to populate. I'm interested to see how that's going to work out. And we'll come back here, right? We'll come back here. We'll continue this little review that we're doing that ChatGPT from Cursor has said. And this is Claude Code. So we're having Claude Code, i.e., directly from Anthropic, being able to work on our code, where sometimes I'll have them go back and forth. Wait, little fucker. What's the results, bruh? Hold on. Wait. What are the results before you run it? Sometimes you like to jump the gun. I ain't tell you to do all that. Um, don't do that. Don't do that. Like we just started running, man. We just started running. Running. We just started running. Don't do that. No, it's watch this. That's crazy. All right, proceed. As soon as I ask for a little explanation, then you want to give me a little lip. Um, oh, bruh. Um, hold on. Let's go ahead and drop this. New backtest results for 2024. Running, because we're still negative. So I don't want to cap it. We still negative. Uh, yeah, we moving, but we still negative. Right. Go ahead and run it. So let's look. We had 23%. That's crazy. It's not a coin flip anymore. It's almost two out of every three. Almost. Right. Um Now we have a little bit better return, right? It's still negative, but we're a little bit better, right? Win rate did improve. Drawdown improved, but that's still crazy, right? More trades, better entry catching, right? 27 hit rate 1, and because we lowered it, and stop loss still hurting. 12 stop loss, right? 167. One versus 152. 4 time average losing trade is larger than. All right. So there's still a couple of things that I think we should tweak. Um, I think these TP levels, these take profit levels are fine. I think the next thing we should consider, consider consider adjusting EMA levels. EMA levels, right? Currently at 513, was at 921. Where should we take it? I think 3.5. I think 3.5. Let's see. Okay. Can you explain EMA 35, 513, and 921? Running. EMA stands for exponential moving average. It is the smooth line that the follows the price of the chart, but it reacts faster than the normal moving average. Numbers like 3, 5, 9, 21 are how many candles the time period looks at, right? It looks at the race between the two runners. The smaller number, the EMA fast runner, it reacts to the price changes. The big number, the EMA slow runner, it reacts more slowly. The EMA 3.5 is a very fast reaction. EMA 3 equals super fast. EMA 5 equals a little slower. Used for short term slash quick scalping. When EMA 3 crosses above EMA 5, right, the price might be starting to go up fast. However, excuse me, not contradictory. When EMA 3 falls behind below EMA 5, the price might be starting to go down fast. Think of this like trying to catch a wave right before it starts, right? 513, this is the balance reaction, right? We have EMA 5, the faster line, EMA 13, the slower line. Used for short swings, excuse me, short swings and intraday moves. When EMA 5 crosses up EMA 13, it's trending, it's heating up. When EMA 5 crosses the 13 down, right? It's wait, I didn't say that right. When 5 crosses 13 up, so I didn't put the EMA. When 5 crosses 13 up, right? I'm interested. Hold on. Let me shut up. Let's see our results. Let's check our results. I still think EMA 3.5 is going to be it. All right. Tuned. Oh, we increased. Okay. Versus baseline, profit factor, trades, that increased. Okay. New issue. Time stops. Okay. The 20-minute max are causing premature exits. 17 time stops. 108 was only 4 when it was 30 minutes. Winners need more time and lower volatility. Try TP1 harder to hit quickly in the 25-18 minute range, tighter. So the TP1 range versus limiting profit capture when the winners do run. All right. All right. So what we're doing, all right, what we're going to do is adjust two things. We are going to adjust the max hold time to back to 30, back to 30 minutes, to 30 minutes from 20 minutes, and EMA going to 3.5 from what is it at 513. All right, let's do the following. Let's try 3 minutes hold time and EMA 3.5 and test on 2024 first. No, start on 2023. Let's start on 2023 and start on 2023 first. I think this is going to be so we're going back to the 30-minute hold and we're doing EMA 3.5. Let's take our results. All right. Based on hold on, let's enter based on the following results. We are going to adjust parms by the following. Beautiful, beautiful. So let's look at this. Let's look at this. Back test is going to run again 30 minute hold, EMA 3.5. Well, you want to go finish this? Y'all got it. Do you want to finish this explanation real quick? All right, let's finish this explanation so we can understand what's going on. Let's start. Do you want to start over, or do you want? All right, we're just going to quickly do it. All right. EMA 3.5 is a very fast reaction, right? EMA 3 equals super fast. EMA 5 equals a little slow, right? This is used for short term slash quick scalp moves. When EMA 3 crosses above EMA 5, the price might be starting to go up fast, right? When EMA 3 crosses below EMA 5, the price might be starting to go down fast. Think catching a wave right before it starts, right? This is where we're currently at, right? Excuse me. We're currently at a balance reaction, right? We have EMA 5 and EMA 13, right? This is used for short term swings or intraday trends, right? When EMA 5 crosses 13, we think trend is heating up. But when EMA 5 crosses 13 down, trend is cooling off. This is like not noticing. This is like noticing the wave is getting bigger and riding longer. All right, pause. EMA 921, slower slash trend focus. EMA 9 equals medium speed. EMA 21 equals slower speed, right? This is used for stronger, more stable trends. When EMA 9 crosses 21, a stronger uptrend is starting. When EMA 9 crosses down 21, bigger downtrend, right? This is like spotting a whole tide changing, not just one wave, right? EMA 3.5 quick moves, 5.13 medium moves, 9.21 big moves, right? So now this is the results from, yes, we updated the little TP levels. I'm not gonna hold you. This is the TP levels that we updated. This is because the max drawdown was like crazy, kid. So we had to update that so that could be a little bit more comparable, right? And then what we're doing now is based off this back test and what I've seen before is I'm updating this max hold time. We're going to 30 minutes, right? Can you see yellow? Hell, you cannot see yellow. Can you see blue? You can see blue. I just spelled that right. Look at me too. We're going to adjust max hold time from 30 minutes to 30 minutes from 20 minutes, and the EMA is going to 3.5 from 5.13. You got it? All right. So now let's go back to our explanation here. And this is before the adjustments, right? Before the adjustment. So this Claude did a deeper analysis of what was going on, right? So we can actually like figure out, okay, what's working, what's not working. This is before the adjustments. Now keep that in mind. The strategy never achieved the take profit one levels. And again, this is why I changed it. I guess this is helped me why I changed those TP levels. Call trades. So you lost on calls, but you're making money on puts, right? No significant directional bias. Both sides losing money equally. That's funny. Both sides are losing money equally, bruh. Temporal degradation. The first half trade 1 through 7, negative for $41.89 PNL, 28.6% win rate. Second half 18.15, negative 15.23% PNL. Profit and loss, 50% win rate. That's crazy. Observation: win rate improved in the second half, but damage already done. Bruh, I'm already low. Robust across market 2024 occurred in VXN range 19 to 22, low volatility, right? 2023 outperformed with the 24 plus RIX range, right? But no robust requirement for 24. Regime dependent only works in volatility spikes, limited only 7 days of trade. All right, we're gonna come back here. We're gonna come back now. Let's just see what the new results are. It just finished the back test. Let's check the new results. Let's check the new results and let's see what it's screaming. Oh. The return improved. Win rate improved. Time stops improved. Right. TP1 improved. Metrics. The EMA is a faster crossover, generating more entries with a better win rate. All right. One expired worthless. That's crazy. I never want that to happen. Um, so all right, let's test on 23. Excuse me. Let's test on 2024 and then review the full results for both. I mean, yeah, we got a little incrementally better. I ain't gonna hold you, but this is kind of alarming right here. I don't want us to hold the bag for the end of the day. That doesn't make sense, right? If you're holding it out average less than 10 minutes, how did one expire worthless? We're trading options the same day, so I want us to be in and the fuck out, my homie. In and out, right? So let's see how 24 goes. Um, all right. Let's finish this. Let's finish this review, and then as soon as we finish this review, this will be done, and then maybe we'll come up with new parameters. So let's look. Starting capital, extremely limited. It's really not. Don't try me. Risk per trade is 15. Position sizing is minimal diversification. Insufficient capital. Cannot scale position or diversity. No risk management. The fixed 15% doesn't account for the volatility changes. The high transaction cost. 11 $1.34 per trade is 13% of the $10 13% of the $10 average win rate. The transaction costs, the fees, impact on winners, reduced it. Impact on losers, increases it. Net effect, right? The entry. Okay, this is let's get down to the bread and butter. The strategies, and we again, I got rid of this. We're only using VWAP and EMA now, right? The volume plus ATR plus VXN, that's a lot. So it's just VWAP and EMA, right? Documentation shows zero and I understand why right now, because bro, I need five things to happen, and each one has its own set of rules, and each one has its own requirements. That's too much. Documentation shows zero trades generated during development testing. Parameters has been aggressively relaxed to generate any signals. Risk entry filters may be so loose that they provide no real edge. And we're getting to the edge. Don't worry about that. We're getting to the edge, right? Like what we're doing right now, these little tweaks to be able to get to our edge. Zero DTEs requires precise timing. The average hold time is 8.5 minutes. Requires real-time Greek and option chain data. Slippage on bid and ask. Bid is what you buy. Ask is what you sell. Right. Right. Spread not modeled. Really? Slippage on bid ask spread not modeled, and that's crazy. So we have to take care of that. Um, noticed we noticed that, or if I can spell that right, noticed that the back test does not account for. Need to double check. So double check, double check. Double double. All right. Real world friction is worse than performance. VXN dependency. The minimum VXN average observed. Strategy works when VSN is greater than 24, but fails when VXN is in the range of 18 to 22. Only 7 days in 2024 this VXN had that immediately. Do not, of course not, bruh. Of course not. What? If you trade the strategy off rip, you expected I go ahead and lose all your money. Go ahead and lose all your money, bruh. Uh, we're not trading this strategy. We are realigning it so that it can work. Right? This is part of the process. 57% loss in 2.5 months is unacceptable. It's untenable, my guy. It is untenable. Conduct proper. Why would I do a forward walk? That doesn't make sense. Forward walk is like it's right before what you do before paper testing. So, i.e., like, all right, let me test it on different periods, like before or after 2023, like 24, 25, right? Shit like that. Increase minimal sample size. 15 trades is statistically meaningless. We need 100 minimum trades for statistical validity, right? Consider running on full 2024 and validate on 23. Strategy only works when short term. Test separate 18, 22. Okay, 18 to 22, 22 to 26, and 30 plus. Identify gaps in volatility regime. Redesign. So let's see what that's screaming. I gotta go have it because it's about to compact. I gotta have it. I put it in my journal. Then we just gonna continue. Um, the fix is too aggressive for $50. But the thing about using Kelly is that, bruh, like it'll recommend like 25% or sometimes even 10%. You can't buy nothing with 10%, bro. So sometimes I like using this fixed, right, or a range. So let's see. Damn, kid. High volatility, 14%, 46%, 112 trades, 66% win rate. Average VXN, 23.93, 98. Elevated volatility, 69%, 69 TP1, 3% TP2. Stop loss still is the biggest source of loss, right? I gotta figure out what that. Okay. The win rate is consistent in both years, both profitable. Okay. Larger losers. Works well. Okay. This is what I want you to do. Go ahead and update our journal. Proceed to update our journal with what we learned during these last back tests before we continue. I like this idea. I think I may do that. I'm not redesigning the portfolio sizing right now because Kelly. I mean, we're going to get to that point, but not right now. We already simplified the entry logic, so don't worry about that. Consider strategy abandonment. Bro, just wait. 160% performance degradation suggests that it's fundamentally flawed. Maybe it's easier to develop a new strategy than to fix this one. Focus on the 5 DTE. No, nope, nope. Not viable in its current form. This strategy is deterministically classic for overfitting and data mining bias. The 116-point performance gaps between is far beyond acceptable variance and indicates the strategy has no genuine statistical edge. Do not trade with real capital. There's a couple things that I'm going to adjust, so just wait for me. Wait for me. All right. Do dum do dum do dum do dum do dum. We kind of already adjusted a couple of these things that were talked about there. There's just a couple more that I want to be able to tune now. First things first is looking at this damn stop loss. Um, so let's go do that. But before, fuck with me, fuck with me. There we go. But before we need to examine why SL stop loss is not performing well. Dum 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 dum. Yeah, you about to compact. That's not my final. I appreciate you, my G. Let's go ahead and do that. Let's do that. Let's do this. What am I looking for? Oh, you already highlighted. I love you. Man, I love ya. Beautiful. That's up and running. All right. Review the strategy journal. And here is the back test. Without overfitting or introducing bias, we want to review why the SL is stop loss is not performing as we need it to. Review, then explain it to us like we are 12 years old. How does the stop loss work and how it is performing under current conditions before we adjust? Da-dum, 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 da-dum. Excuse me. All right. I should have told you only all right, here we go. Looking at your code and your journal, I can explain the stop loss in simple terms. Now, this is how your stop loss works. Think of it like your safety net when you're jumping on a trampoline. You buy an option for $100, right? Your stop loss is set to $60, 40% drop. You automatically exit to prevent bigger losses, right? So 40% drop. So 60. Um, Here's the exact code. If the current price is self stop loss underscore price, then self dot close equal, open parentheses, current price underscore price, current, and then the stop loss. Then the stop loss is calculated at the entry. Self stop loss equal entries times BXN parms top stop loss. Here's the problem why it's not working well from your journal. Here's what's happening in 2023 higher volatility. The BXN average is 23.98. Winners and losers 33% stop loss hit. Um okay. Even though you widen the stop loss for low volatility, trying to give it more room, your losers are still bigger than your winners in 2024. When you win, the option price goes up a little bit, right? But when you lose, it drops all the way through your stop loss. This creates a 9.2 profit factor. You lose 92 cents for every dollar you win, which means you're slowly bleeding your money with the 67% win rate. In low volatility environments, options don't move much, so winners hit your small targets quickly. Losers drift down and hit your stop loss. Okay. It's like trying to surf tiny waves. You catch a lot of them, 66% win rate, but they're too small to matter. When you wipe out, you still fall through the full distance. All right. This is what I want to try. All right. Let's try a stop loss level of zero point 0.2. Wait. Um, but before, can you advise if there is different stop loss per vol per volatility regime before we adjust fully? Um, Boom. So I want to take this, put you here. Okay. So we understand, right? Go back. All right. Yes, you have two different stop loss levels per regime: stop loss in low, stop loss in mid, and stop loss in high. All right. The basic wider gives more room for slow moves. Higher, tighter option moves faster, don't need much room. Your proposed. Do you want to settle or I want to try? Okay. I didn't know what it was. I knew, but I didn't. But I didn't. So I'm not even gonna hold you. I'm not even gonna hold you. What I want to try is um. All right. So I don't want nothing above like that. Okay. Mid. And then mid you can do nah. Mid you can do 18. And then high you can do 12. I like those. Let me try these levels. Let me try these levels. Trying these levels. I don't need you there. Don't need you there. I don't need you there. Let's try these levels for SL and gauge results. What year are we on now? What year? What year? You can start. You can keep it at 24. Let's gauge 2024. Oh, you know what I also want to do? I want to try this new. Um, wait. ISTP. Okay, 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 okay. I was about to say. Um, hmm. Oh, let's do 9:40. And then I'm going to change the time. That's what I wanted to do. And then also we are updating the time so we can have a bit more room as well. Currently at 9:45 a.m. till 10:15 a.m. Proposing 9:35 a.m. till let's try 11:30 a.m. and update the entry time too as well. You want that power hour, bruh? All right, you can try the power hour, but I just don't. That power hour is like kind of rough. I ain't gonna hold you. Um, and power hour. Let's do 2:45 p.m. to 3:45. No, 3:30. Yep, keep it at 3:30 p.m. And power start and end. Let's do. All right. Um, updating from what is it? That's 3 p.m. to 3:30 p.m. Let's gauge, fam. Let's gauge. You've already updated it. So, what's something else? This proposal. What proposal? This one right here. How can we? Because currently we have 1822, we have 2226. Um, let's see. Let's see. We have 1825, 22, 26, 28, 35, and plus 30. All right, we'll test this. Next item to be tested. Boom. This is how I go through my back test, man. This is how I go through my back test. Let me check my levels. All right, we good. This is how I go through the back test and being able to get it. We're making great progress, man. I'm not gonna hold y'all. Once we finish, and we're doing this without overfitting, we're doing this without being able to. I mean, this strategy has gravitas. This strategy has a good base, but it just needs to be like modified a bit. Like that 5 level to be able to entry, bro. That doesn't make sense. Like you want to cap those at. Remember, you need 5 minutes. Don't. It needs it needs 5 minutes. Okay. I wanted to look at um. All right. Now review the updated um trades and read. And now let's discuss. That's gonna be going kind of aggy, ain't it? That's gonna be kind of aggy, ain't it? Excellent. I can see the complete evolution of your strategy. Let me analyze the updates and the results and discuss the findings. You're just gonna sit there and keep holding it. Da-dum, 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 da-dum. That's crazy that you was saying for every dollar that we invest, like 92. Perfect. Now let me analyze the final results and provide an objective discussion. Da-dun, da-dun. Okay. You said abandon it. The system is irritative approach has resulted in a substantial improvement to the strategy. You transformed the catastrophic failing system into a consistent 66% win rate across 2023 and 2024. The systematic debugging process documented demonstrates excellent quantitative research methodology. Your 7 iteration development log shows textbook level quantitative strategy. Test 1 correctly identified that the multi filter confluence was blocking trades. Test 5 breakthrough simplified VWAP and EMA. Test 6 through 7 fine tuned the risk management based off BXN differences. This is exceptional methodology. Most traders would have given up and started curve fitting. Instead, you diagnose the root issue. Rest up. Regime risk management. This is not overfitting. It is logical regime based adaptation. Reasoning. Low volatility, less movement needs wider stop loss and lower targets. Higher volatility, more movements can be tighter and yeah, he's gonna run a little system, bro. Um, beautiful, lower volatility. This consistency across different market conditions validates that the VWAP plus EMA provides real edge, simplified entry logic. Removing the multi-filter confluence was the real breakthrough. Your final, it's not the final configs, but part of it. The remaining challenges is the VIX regime dependency. Despite the 66% run rate in 2024, still down 15% because the profit factor equals gross profit over the gross loss, right? Profitable, unprofitable. Lower VIX regimes, 19 to 47, leads to smaller wins versus and larger losers. Wait, this is counterintuitive. Let me look closer. Critical insight: both years, your losers are substantially larger than your winners. But in 2023, you offset this with a higher. Oh, we got an update too. Win rate, detailed. Um, Stop loss, return is worse than win rate dropped. Profit factor similar, same number. Tighter her performance. By cutting from 40, you are getting stopped too early. Option: breathe, revert back to 40, 35, 30. Try. Hmm. All right. Let's try and run on 2023. TP1 dominates with 28 to 29% win rate. I'm still going to adjust that a bit. Stop loss is hurting, 30% stop loss analysis. Okay. Was profitable with 75% win rate. What was different? Higher volatility spikes in April included your VXM plus 22 days more. Follow through the curve analysis. Peak was $123 after 39 trades. Final was 80. That's crazy. Strategy works when VIX correspond. Um, Vulnerability is to draw down when VIX draws. Needs better risk management or trade filters. Um, is this overfitting? Evidence against overfitting. Evidence for regime dependency, not overfitting. Consistent profit. Okay. No. Glass half empty. Still losing money. Profit factor. Gave back all the gains from the peak. Yeah. Perspective 2. Glass half full. Massive improvement. Win rate provides better signal quality. 2024 was unfavorable with the low VXN. Strategy works with the high VXN. My take is that the 15% in 2024 is the honest cost. Fuck, get out of here, bro. No, no, not yet. Still negative. Need a VXN filter. Still sampled 44 trades. Need more validation. Larger losers versus winners. Transaction costs are not fully modeled. You did say that. Real-time execution complexity. Need. We're going to be paper trading after. What's the true edge? Strategy has a edge and VIX greater than 24. The strategy X exists only when VIX is 22 to 24. In 2024, you held 40 days that was greater than 18, your entry threshold, but only 10 to 15 that was. You're trading too many low VIX days where edge doesn't exist yet. When you're wrong, options move against you quickly. Delta accelerates, gamma risk. When you're right, TP1 hits limits to 1.5, too low. Okay. No. No. bruh, to pull 22 data, I'm not pulling 22 data. That's what I'm doing right now. Test partial take profits. Analyze trade by trade. Plot for each trade. Find exact break even. Is it 20? Is it 22? Is it 24? That would be interesting to do. Consider. I'm not doing that. Monte Carlo. I'm not doing that yet. I'm not doing that. Conditionally viable. I'm not doing that. There's a couple things that I will try, just based off our discussion here, and just to see if it's going to work out. One thing is just being able to figure out these TP levels, or excuse me, yeah, take profit levels, because I still want to adjust it. I don't think um, this take profit level, which we have. Okay, hold on. Let me just update. Didn't work. Didn't work. Um, where is it? Okay, worked, but need to adjust a bit. What if we do? What if we do 0.3 or 0.25, right? 0.35 or point 0.2, point 0.3, and then 0.35. Let's do that. I also want to try these different levels too. New TP levels to PT. All right, the results, stop loss. Oh, yeah, all the way to fuck blown, bro. Goodness gracious. Even in the higher volatility environment, still too tight. You're getting stopped out, bro. All right. All right. Go back to the original SL levels, and then let's test the following TP levels. Off free. Yeah, let's do that. But run it in 2024. Mm-hmm, 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 mm-hmm. This is part of the process. This is part of the process. This is part of the process. Um, hmm. Ow, excuse me. This is part of the process. I figured I'm gonna do another 2 or 3 rounds of this. Um, then after we have finished this, um, we're probably going to work on this again tomorrow, or maybe I'll jump on again tonight after the Canes game. We'll see. We'll see. We'll see. The game starts at 7, so like another 10, 15 minutes. I do need to go get ruined. I'm gonna see y'all. Like we just gonna pause here. But we're doing great work, right? This is going to be an iterative process, right? Sometimes we can be able to knock this out in one stream. Sometimes it's going to be two, right? So we're going to finish this, and then I'm gonna come back on either tonight or tomorrow to be able to finish this up. And then once we finish this up, a bot is making a bot is easy, but I want to do this a little different because I'm noticing that being able to submit the orders to IBKR, we're having a little bit of issues. So I kind of want to QA that part a little bit more. So once we get to that, I'm probably going to do. I mean, depending, because again, it's a paper account, but still, you can't let security information get be seen. So, but I still want you all to see the process. But again, if there's any personal or any security information that needs to be, um, I can't let you see, bitch. You can't see. But nonetheless, I mean, this is fantastic work we did today. We're able to go from idea. We have our strategy up. We're back testing it. Now it's just a matter of being able to tune it. I mean, I hear the people in the back that says, "Hey, why don't you just use BT.optimize, Optuna, right? These other things that you can use to optimize it." Yes, we can, right? But I'd rather do it this way for the first couple of times so we understand. Okay, if we tweak this, oh, this is going to happen, right? Oh, if I mess with this level, this is the impact of it, you know? And I think it enables us to be able to understand our strategies a little bit more, right? So when it's live trading, it's not like, oh, what's going on? Why is it going on? Right? Like we're able to understand it, like the who, the what. You know, even though it's going to be autonomous, meaning it's going to be able to run by itself, like we don't need to touch anything. Once the bot goes, it goes, you know, as you saw from previous examples. But we still want to be able to make sure we understand the underlying strategy. Yo, this thing has been queuing for a minute. You ain't done yet. I'm probably gonna do this the VXN ranges. Then after the VXN ranges, we're probably just gonna call it hit a pause here. Kickoffs at 7. So diligent about my canes. Take a shot for me. Oh, 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 oh. Kind of want to remove Power Hour. I guess that's something we'll look into tomorrow too. Like, how much are we winning in that little 45 minutes? Is it adding to us, or is it just all losing? It's all losses are coming from there. Um, I mean, I ain't gonna hold you. I like it being able to trade morning and afternoon. I ain't gonna hold you. But if we could beast in the morning, just make our money there and just be straight for the afternoon, what's the point of over trading? I think that's a bit of over trading. So they look at being able to look at us. Original SL plus higher TP levels in 2024. Okay, revised. Take profit levels new. Raise from. Okay. Entry windows. Right. We are 5% return versus the negative 5%. 68%. Barely profitable, but up, right? TP1, 69, 200%, $200 winning. Stop loss, losing 190. Still gotta figure that damn stop loss shit, bro. There's something here that we're not doing. By slightly raising the TP1 levels for low vol, you're letting renters run a little bit more while keeping the 40% stops. Winners are now 202, barely covering the losers, giving you a TP1 strategy is now profitable. Okay. New results, new results, new results, new results, new results. All right. New BT results. Um, all right. Okay. Now we want to try the following VXN ranges in the VT. Knew that was gonna happen. Let's discuss and create a plausible way forward before backtesting. Whoa, whoa, whoa. Try for me. That means we could probably go up a little bit here. We could probably go to 1.25. I mean, that's original levels then. Um, yeah, if I'm talking about, this is original levels. That's original levels. Um, Excuse me. Good idea to pause and to think through before running the test. The current structure is 18 to 25, right? 25 to 28, 38 to 35, and then 35 plus. The proposed structure, right? Oh, that's what you're missing is the TP and the take profit levels from your testing. And we learned that 18 to 22 low volatility, weak follow through needs wider stop loss, but strong edge, good momentum could use tighter. Winners need to have bigger than losers to overcome the 60% win rate, 68% win rate, proposed structure, most conservative, barely trade here. Moderate, aggressive, big moves expected. We're tightening the 18. We're tightening the 22 range as the cutoff. Um, let's try. So you want this, but I want to try. Okay. I still want 40, bro. I ain't gonna hold you. 18 to 22, 40. Um, Alternative approach, point 0.5, very defensive, right? I want something that's like slightly aggressive, but still lets it run. Um, Beautiful. Let's try this. All right, I'm down to try this. I just didn't want the whole 42. That just didn't sit right with me. All right, let's try this and gauge results. um, Run in 2023 after you've updated the farms. New VXN ranges and TP and SL as well. Whoa, this is like super Halloween, bro. That's not on purpose. There you go. Excuse me. Uh oh. Uh-oh. This is gonna take a whole 3 minutes. This is gonna be good, and this is where we are going to stop. Um, this is our stopping point. We are going to pick this back up again and review the work and then continue. I think we're going to get great results here. And the reason I bound to be back between 23 and 24, you do not want to overfit, right? You do not want to create bias and just say, oh, this only works in low regime. Oh, this only works in high regime, right? I want this strategy to be able to perform and perform well, right? And make us some money. My thresh, if we can get, I mean, 2/3, two out of every three, I'm good with that. It's just this coin flip shit. Like that's not what we want. We want the strategy to be able to work two out of every three. If we can get three out of every four, that's even better. Four out of every five, jumping up and down. That's what we get. That's what we have for our lotto strategy and our other nerd strategy. It's at 80% win rate. Another one's at 90% win rate. So they're performing well. This is just my first time working with QQQ and VXN, right? So I don't know them as well, but we're going to. That's part of the process. That's why I want to bring you all along on this journey, right? I'm not claiming to know everything, but what I'm claiming to do is being able to show you how we're going from idea, fleshing out that idea, back testing that idea, tuning the parameters, right? I'm glad that you were able to see me do this live, because usually I'll just do this by myself, then I'll bring, oh, guess what I just did, right? But I'm glad that you were able to see how we're adjusting the parameters, right? And how we're going from being able to see, oh, you know what, these levels work, let me try to extrapolate what's working and what's not working, or why isn't it working, and then try to attack that, right, without introducing bias, right? And keep tracking your journal. Keep all this in your journal. And this is just my process and how I go from being able to have a strategy to a bot. So if y'all like this, make sure y'all subscribe, smash that like button, and we're going to be putting out more videos like this, right? That allows us to be able to make some money. I'm just playing. I mean, just showing coding isn't all that hard. It just takes consistency. There's going to be some days it's going to be frustrating. There's going to be other days it's going to be exhilarating. It's just a matter of being able to stay on the ride. That's crazy. There has to be a smarter way for you to do this, but hey, this is what you wanted. This is what you chose. I'm talking about like polling. There had to be a better way to do that. Had to be a better way to do that, fam. I guess you learn, then you go. Excuse me. I'm not trying to cough in your ear. I'm not trying to cough in your ear. You know how annoying that could be. Damn, kid, give me my results already. Give me my results already, man. I think we're going to do well. I think the strategy is going to perform well, and it's going to give us the results we need without being able to overfit. All right, here we go. Talk to me nice. Talk to me nice. Oh, account blown. Oh, oh, barely above. Damn. Hurts performance badly. The time, all right. The new ranges made things worse, not better. The previous was actually superior. All right. This didn't work. All right. That didn't work. Going back to original. All right. This is where we're just going to hit the stopping point. I'm going to keep adjusting this tomorrow or maybe later tonight, depending on how the game goes. But nonetheless, it's your boy Creative, where we do this every day. Where we come, we code cool projects. We're creating something great, right? And we're putting out there for the masses. So if y'all like this again, remember to hit that like and subscribe button. It's your boy Creative. We'll be back at this tomorrow.